stop what you're doing. Your financial future is hanging on a single choice you're about to make. If you're watching this right now, I know what you're asking yourself. Should I invest first, or should I attack my debt? It's the great financial debate of our age. And it's a trap. The very fact you're having this debate means you've already lost the most important war, the war for your own financial sanity. You've accepted a heavy stone as a normal part of the climb. This is the birthplace of ruin. It always starts with one reasonable excuse. People tell themselves a beautiful lie, that debt can be a tool. They say, my interest rate is low, my potential returns are high. They think they're playing chess against the system. They're not. They're playing with a live grenade in a thunderstorm. I've spent my life studying this. No one ever goes bankrupt without first owing someone else. That's not chance. It's arithmetic. The wealthiest people sleep well not because of their assets, but because they have no masters. You cannot construct a rational future with an irrational weight strapped to your ankles. You cannot plan for decades when you owe in weeks. And you cannot claim liberty while someone else has a lien on your income. Debt alters your very perception. It demands quick, rash choices. It murders your ability to wait. And in the world of investing, waiting is not just a virtue, it's the entire engine. I've watched intelligent people boast about their market returns while carrying expensive loans. That's like bragging about your speed in a race while dragging an anchor. The anchor always wins. When I was younger, the memory of economic hardship was a fresh wound for everyone. They saw debt for what it was, a slow poison. Today, we treat it like a dietary supplement. Everyone takes it. No one believes it's fatal. But this poison doesn't kill dramatically. It kills softly, invisibly, when your defenses are down. You want to be an investor? Go ahead, but don't call it investing if you're using borrowed funds. That's speculation wearing a business suit. The only distinction is that a speculator often knows his game. I've watched leverage erase fortunes belonging to people far more brilliant than us. Intellect is no shield against the mathematics of obligation. The math of debt is merciless. It compounds against you with flawless, silent dedication. And compounding, whether it is your friend or your foe, never takes a day off. People ask me, what if my loan is at 4% and I can earn 8%? My answer is simple. What if that 8% vanishes? What if your investment falls in half? What if your income disappears next week? Your debt doesn't care about your brilliant forecasts. Your debt is a constant demand, a metronome of obligation that never misses a beat. We overcomplicate the obvious. You don't need a complex model to know the truth. You need ancient, untrendy wisdom. If you owe, you are not free. If you are free, fight to stay that way. Because freedom, real freedom, compounds more powerfully than any investment fund ever created. Wealth, in its truest sense, isn't measured by what you accumulate. It's measured by what you don't owe. When you owe zero, every single dollar you earn is completely yours. And when you command your own time, your own choices, your own peace. That is authentic prosperity. So before you dive into the next hot trend, ask yourself one piercing question. Are you building a fortress of independence, or are you just adding nicer furniture to your cell? That's the only question that matters. People pretend finance is emotional. It's not. It's simple, cold calculation. And calculation is indifferent to your hopes, your dreams, or your clever strategies. Let's discuss the arithmetic you can do on the back of an envelope. If you owe $20,000 at 18%, that's $3,600 a year slipping from your grasp, guaranteed. You cannot avoid it. You cannot outsmart it. It is a sure loss. Now, show me where you can find a guaranteed, risk-free 18% gain in any market. You cannot. That's the terrifying clarity of debt. It is certain. And certainty is the most lethal force in money when it's aligned against you. I have witnessed countless individuals fixate on their stock picks while their credit card interest devours their potential. They'll agonize over portfolio percentages while the interest on their debt grows faster than the companies they own. That's not strategy. It's a performance. It appears sophisticated, but it is fundamentally foolish. You don't repair a sinking ship by installing a better sail. You plug the leak first. Debt is the leak. Investing before sealing it is merely sailing faster toward the storm. People cite historical averages. They say, the market returns 10% over time. Sure, over vast stretches, and only if you possess the nerve to endure terrifying drops without flinching. Most people lack that nerve. They possess a heartbeat. And when markets plunge, so does their courage. Meanwhile, their debt keeps compounding, steady as a heartbeat, oblivious to Wall Street's moods. The mathematics is unconcerned with market recoveries. Your creditor wants his money on the first of the month. When you are in debt, you are running a race between compounding interest and compounding intelligence. Most lose because they fail to appreciate how quickly foolishness multiplies. You cannot think strategically when a clock is ticking in your mind. Debt taxes your psyche long before it taxes your bank account. You begin making hasty moves instead of wise ones. You sell at the worst moment, you freeze, you hope for a windfall. That's not investing. That's gambling for your life. I've always believed that if you cannot endure a setback, you don't deserve a windfall. But when you are leveraged, even a minor stumble can be a cliff. More portfolios are destroyed by debt than by poor investments. A bad stock is a lesson. Debt is a prison sentence. If you truly respected mathematics, you would treat high-cost debt like a house on fire. You wouldn't stop to admire the paint. You would escape. You would eliminate it. Even if it means postponing your grand investment plans. I once advised a young professional who wanted to buy stocks while carrying credit card balances. I said, "You're asking if you should build wealth or service a guaranteed 22% drain. That's like asking if you should breathe air or smoke. The correct answer is clear. It's just not convenient. And we despise inconvenient truths. The truth is, eliminating high-interest debt is the highest, safest return available. It's tedious, yes. But so is remaining solvent. Everyone craves excitement until excitement delivers a catastrophic margin call. Then they learn that boredom has immense value. The greatest capital allocators I've studied never saw debt as leverage. They saw it as a contagion. You quarantine it immediately, or it consumes you. So when you ask, should I invest or pay down debt? I reply, the person without debt can wait calmly for the perfect pitch. The person with debt is forced to swing at every wild throw. And the market does not reward desperation. You cannot think clearly when you owe. Intelligence is irrelevant. Debt rewires your circuitry. I've observed sharp minds grow dull because they were constantly calculating their liabilities instead of their possibilities. When you owe, your horizon shrinks. Every choice becomes about defense. You stop scanning for opportunity and start planning for survival. That isn't liberty. That's high-tech servitude. People claim debt is an instrument. Fine. A chainsaw is also an instrument, incredibly useful in expert hands, and catastrophic in untrained ones. Most people, financially speaking, are untrained. There is something deeply corrupting about being in another's ledger. It erodes your autonomy. It changes how you speak to your employer. It makes you accept conditions you should reject. It trains you to excuse rather than escape. That's why the old concept of living within your means remains powerful. Not because it's moral, but because it's sane. You cannot cultivate sound judgment in a mind under constant siege. You need mental room to think, and debt leases that room to a bank. I've seen people make reckless bets just to break even. They chase volatile assets, they buy digital currencies in a frenzy, they heed charlatans promising instant riches. All while whispering to themselves, just one big score. That's not investing. That's hope disguised as a plan. The cruel irony is that indebted individuals often work the hardest, but their labor compounds for a lending institution. Their time becomes the bank's interest income. And the bank, you'll note, never gets tired. You cannot purchase peace of mind with a credit line. You can only rent a temporary imitation before the true invoice arrives. This is why the debate over good debt versus bad debt misses the point. Both are hazardous. One is a slow poison, the other a fast one, but both rob you of rest. You wish to build genuine wealth? Begin by eliminating financial fear. That is your bedrock. Every dollar of debt you destroy is a chain removed from your imagination. And a free imagination is the ultimate engine for growth. Early in my career, I had little. But I also had zero obligations. That made me formidable. I could decline terrible offers. I could say no without a flicker of fear. That single advantage, independence, was worth more than any loan. Most never realize the true yield of debt repayment isn't just monetary. It's psychological. It returns your optionality. It restores your capacity to be patient. And patience, I've often stated, is the scarcest form of brilliance in finance. So ask yourself, what is the true objective? To appear affluent, or to be autonomous? If you choose the first, the second will forever elude you. Every era believes it has reinvented obligation. They use polished terms, smart leverage, optimal capital structure, efficient financing. Strip away the jargon, and it's the same ancient error in a new costume. Leverage, in any form, amplifies results, both positive and negative. The issue is human nature ensures the negative will arrive. And when it does, leverage transforms a slip into a plummet. I've witnessed this story repeatedly. It always begins the same. Someone borrows to accelerate. They convince themselves they're being analytical, using other capital wisely. For a season, it functions. They make some good calls. The spreadsheet looks impressive, their confidence inflates. They start to believe they've tamed uncertainty. Then the economy shudders. Rates climb. A single deal sours. And suddenly, their entire structure collapses like a house of cards. That isn't misfortune. It's arithmetic confronting reality. I'll state it plainly, if you are heavily leveraged, you do not own your assets. They own you. You are merely a temporary custodian of an illusion. Decades ago, I watched gifted people obliterate themselves with borrowed capital. It didn't matter how superb their operations were, a short rough patch, and the creditors arrived. The capitalist cemetery is populated by geniuses who over-optimized their liabilities. Today, I hear people justify leverage because rates are low. That's like saying you should dance on a cliff's edge because the weather is calm. Eventually, the wind shifts. The real calamity is that leverage doesn't just ruin portfolios. It ruins temperament. You cannot remain calm when a bad month threatens your existence. You cannot think long-term when the short-term can end you. And once panic enters, reason exits. This is why the most successful enterprise I know was built with minimal debt. Not from ignorance of leverage, but from profound respect for its dangers. They wanted to endure all seasons, not just flourish in the sunny ones. The power to remain motionless while others flee, that is the supreme edge. And you cannot possess it if a bank owns your nervous system. People inquire, what about using debt for property or a business? I respond, if you must borrow heavily to make an endeavor work, the endeavor isn't sufficiently robust. It's that straightforward. The finest opportunities are attractive even when funded conservatively. The moment your venture depends on a lender's grace, you are no longer a builder. You are a prisoner. I once listened to a man boast about borrowing at 3% to earn 6%. I told him, you're making 3% while risking your entire capital. He disliked that response. Most do. They prefer a comforting fiction to a hard fact. The fact is, leverage makes you brittle. It converts a temporary dip into a permanent loss. It punishes hubris quicker than ignorance. And it guarantees you will one day meet the margin clerk, finance's most pitiless instructor. If you lie awake at night, you're overleveraged. If a market correction wrecks your blueprint, you're overleveraged. If you require good fortune to stay afloat, you are not an investor. You are a speculator hoping for kindness. My counsel: don't play with lit dynamite. The fuse is always shorter than you estimate. People imagine the goal is abundance. It is not. The true goal is sovereignty. You don't desire more money to acquire more stuff. You desire it to cease doing foolish things. And nothing is more foolish than trading your sovereignty for leverage. Debt sells the mirage of advancement. It whispers, have it now, settle later. But later always comes, and it collects with compounded interest, both financial and mental. I've watched people shackle themselves to dreadful jobs for the salary. I've seen families postpone joy for years under the weight of manageable mortgages. I've seen investors with superb judgment make timid choices because their loan terms dictated their actions. That isn't wealth. That is bondage in a business suit. Freedom doesn't stem from owning more. It springs from owing less. When you owe no one, you can see clearly. You can decline when others must accept. You can ignore the herd, the fear, the noise, because you are not desperate. People undervalue how potent that is. Independence is like air. You don't notice it until it's gone. In the past, I observed a generation borrow against their homes to buy soaring stocks. They thought it was clever. They called it financial engineering. Then the bubble burst, and they learned a basic truth: you cannot spend paper gains when the margin call arrives. The irony. Those who avoided leverage looked pedestrian for years, until the explosion. Then, suddenly, pedestrian looked prophetic. That is capitalism's recurring story. You don't need to outsmart everyone. You simply need to remain rational longer than everyone. And remaining rational is impossible when you're leveraged. People think I'm fanatical about avoiding debt. They're correct. I am, because I've witnessed what occurs when life veers off script, and it always does. You fall ill. You lose income. Markets crater. The survivors aren't those with the largest accounts. They are those with the smallest claims against them. That is the paradox of prosperity. The freer you are, the wealthier you feel. And that sensation doesn't come from a brokerage statement. It comes from command. Command over your hours, your decisions, your tranquility. That's why I tell people the ultimate investment isn't in a stock. It's in repurchasing your independence, $1 of debt at a time. You cannot price a good night's sleep. You cannot compound wisdom under pressure. You cannot make clear choices while another entity holds a claim on your tomorrow. When you have no debt, you can wait for the perfect pitch. When you're leveraged, you must swing at every throw. That is the chasm between discipline and despair. Yes, freedom defeats leverage every single time. It may seem slower. It may seem less thrilling. But it is permanent. And permanence, in a world of constant flux, is the ultimate edge. You'd think after centuries of financial calamities, we'd learn. We don't. Each new generation arrives with the same delusion, that they've discovered a smarter way to juggle debt and investing. The young label it responsible leverage. The older call it making their money work. All forget that capital only works for you when you aren't already indentured to it. The human mind excels at self-deception. We justify folly faster than we fix it. So when someone says, I'll invest while paying down loans slowly, what they truly mean is, I want to feel prosperous while still being captive. It's an emotional tactic dressed as a financial plan. And emotion is the adversary of rational economics. I recall a young person asking, shouldn't I invest instead of clearing my student loans? The market rises over time. I replied. Markets rise over the long run, but you don't live in the long run. You live day to day, month to month. And debt compounds every single day. He looked crestfallen. He wanted a clever solution. But in life, it's simple arithmetic that protects you, not clever theories. People seek leverage because they despise the gradual path. They can't stomach the idea of spending years cleaning their balance sheet before investing. So they leap ahead. They invest first and promise to manage the risk. But reality is indifferent to your impatience. If you skip the boring steps, you don't accelerate, you detonate. The most enduring enterprise was built on a plain foundation: discipline first, growth second. That's why they never had to liquidate in a panic. That's why they could weather every storm without losing rest. Because they never let debt dictate their moves. Most lack this luxury, not because they can't achieve it, but because they won't choose it. They're addicted to comfort. They cannot delay gratification. So they try to engineer it with leverage. They wish to appear successful today, not be successful tomorrow. I've seen this narrative end identically every time. Debt provides a brief boost, then slowly consumes you. It's like sugar, instant energy, long-term decay. And here's the saddest part, when you live under debt, you lose your appetite for smart risk. At the precise moment opportunity emerges, you'll see a market crash and, instead of buying, you'll freeze, because you need cash to service your obligations. The bold become timid. The unwise become destitute. Debt doesn't just ruin your finances. It ruins your timing. It enslaves you to volatility. It forces you to react, not to contemplate. The world's best investors don't crave constant excitement. They require endurance. And endurance springs only from strength. You cannot be strong when you're leveraged. So, yes. Most have it backward. They believe investing will rescue them from debt. In truth, evading debt is what permits you to become a superb investor. It's the tedious work, saving, living modestly, trimming expenses, that builds the foundation for compounding. But people skip it because it isn't glamorous. They want rapid results, not lasting ones. The world rewards permanence. The financial graveyard is filled with those who confused velocity for intellect. So here is my final counsel. If you ever catch yourself boasting about your efficient use of debt, halt. You're one downturn away from a brutal lesson. Debt doesn't merely take your money. It steals your time. And time is the raw material of compounding. You see, compounding only works when you grant it decades. Debt obliterates that timeline. It forces your focus onto the next payment, not the next decade. That's the part most miss. They believe the cost of debt is just the interest percentage. No. The real cost is the distraction. It pilfers your ability to think long-term. It contaminates your patience, the single most precious investing trait you can possess. When you owe, your brain becomes a short-term machine. You think in weeks, not years. You cannot let investments mature. You cannot sit through downturns. You cannot stay rational when your lender demands cash and the market offers chaos. Debt makes people fragile. And fragility is the nemesis of compounding. I've met innumerable investors who could have built empires if only they'd been able to wait. But you cannot wait when you're leveraged. You sell at the wrong time, for the wrong reason, to the wrong party. And the worst part, you'll call it prudence. No. That's not prudence. That's survival. Lasting wealth was constructed by avoiding situations that forced action. They wanted the power to choose when to move, not the need to move. That's the distinction between freedom and servitude. I've often said the first rule of compounding is to never interrupt it needlessly. Debt is the ultimate interruption. It's the financial equivalent of yanking a sapling from the soil every week to check its roots. Yet people keep doing it, refinancing, rolling balances, borrowing anew. They call it management. I call it self-sabotage. Here's an untaught rule: every dollar you owe is a dollar that cannot compound for you. Every year spent repaying past mistakes is a year stolen from your future liberty. If you begin at 25, debt-free, time is your ally. If you begin at 35, buried under loans, time is your adversary. Same person, different destiny. All due to leverage. People adore discussing the magic of compound interest, but forget it operates in both directions. Debt compounds, too, just in reverse. It's like running uphill with a backpack of stones. When you're debt-free, modest progress multiplies. When you're in debt, even great progress is neutralized. That's how the prosperous stay prosperous. They let compounding work for them, uninterrupted. That's how the striving stay stuck. They spend lifetimes compounding for a financial institution. It's a silent trap. It doesn't detonate like a crisis. It erodes, like rust. One refinance, one temporary loan, and you've surrendered years of compounding potential. People think getting rich is about brilliance. It's not. It's about staying in the arena long enough for compounding to operate, and debt ejects you from the arena prematurely. So next time you hear someone tout their smart leverage, remember, you don't defeat compounding by being clever. You defeat it by being consistent. Debt shatters consistency. And those fractures, over a lifetime, cost fortunes. Stay out of debt. Stay in the arena. Let time lift the weight. That is how ordinary people become extraordinary stewards of capital, slowly, quietly, without leverage. People persist in asking the wrong question. Should I invest or pay off debt, as if it's a calculation? It isn't. It's a question of ownership. Who owns your hours? Who owns your peace? Who owns your next decade? If the answer isn't "I do," then the discussion is finished. I've said it before. The planet is full of people who look affluent but aren't free. They drive leased vehicles, live in mortgaged homes, invest with borrowed funds. They've constructed gorgeous cages and are too busy adorning the bars to see the lock. That is modern finance's tragedy. People mistake motion for progress. They think balancing loans and investments signifies sophistication. But complexity doesn't make you smart. Simplicity makes you secure. I knew a man, decades ago, educated, sharp. He always lectured on intelligent leverage in real estate. He spoke of optimal capital allocation. Then one economic contraction later, the bank owned it all. He didn't lose his IQ. He lost his margin for error. That's what debt does. It removes your buffer. And without a buffer, you cannot survive the unexpected. The most successful investors never aim to be the smartest. They aim to be the last one standing. That's a smaller target, and a better one. You see, when you're debt-free, you can afford patience. When others panic, you can think. When others sell, you can acquire. When opportunity knocks, you can answer, because no one is holding the door shut from the outside. People believe financial freedom is a destination. It's not. It's a condition. And it begins the instant no one else owns your decisions. The modern investor craves both freedom and leverage, but they are opposites. One grants control, the other sells it. You cannot be partially independent. You're either free or you're owned. If you must check with a lender before deciding, you're owned. If your risk tolerance is dictated by monthly payments, you're owned. If your calm depends on low rates, you are renting tranquility. And rented tranquility always expires. People don't grasp that debt is a subtle master. It doesn't yell. It murmurs. It tells you, avoid that risk. Keep that job. Don't wait. It molds your behavior until you believe you're choosing, but you're just managing claims. The great irony. Most who are trapped were only trying to be responsible. They wanted to build credit or use leverage wisely. They ended up serving a machine that never sleeps. I'm not saying don't invest. I'm saying earn the right to invest. You earn it by first buying back your freedom, by slaying the debt that owns you. Once done, the mathematics of compounding becomes your ally. You can sit still. You can let time labor. You can ignore the noise because you're no longer playing defense. So, should you invest or pay off debt? The authentic question is simpler: do you wish to possess your life, or be perpetually indebted to it? Choose once. Choose wisely, because that choice compounds, too. People loathe the word slow. It insults their ego. They want results now, the fortune in months, the freedom in years. But that's not how compounding functions. Compounding demands patience. And patience is unattainable when you owe. That's why the gradual path, built on saving, staying clear, investing steadily, looks boring. They don't see that boredom is the secret ingredient of lasting wealth. When you remove debt, time becomes your partner, not your predator. You stop racing. You start compounding. And slowly, silently, the world tilts in your favor. The trouble is, no one boasts about slow wealth. It's not impressive. There's no thrill in living below your means or clearing a mortgage early. But there is profound peace. And peace is what allows wisdom to multiply. I've watched people chase frenzies, stocks, crypto, booms, all fueled by borrowed capital. They call it seizing opportunity. I call it seizing delusion, because every cycle concludes the same: the leveraged are crushed, and the patient prosper. Wealth built slowly doesn't crumble. It survives recessions. Inflation, bad governance, bad luck, because it's built not on momentum, but on a margin of safety. No one got rich quickly in a lasting way. They got rich certainly. And certainty is the superior bargain. Every investor should etch this into their mind: speed murders compounding. You cannot rush exponential growth. You can only avoid stupid interruptions long enough for it to happen. And debt, my friend, is the stupidest interruption you can normalize. Because while you pay interest, someone else earns it from you. Every loan is an investment you make for your lender. That's the paradox of getting rich slowly. The instant you stop pursuing fast money, your authentic wealth begins, because you finally stopped interrupting compounding with nonsense. I once told a young man who complained about the time required to build wealth through saving, "Do you intend to live a long life?" He said yes. I said, then why not spend that time getting rich slowly? It's the sole method that genuinely works. Most wish to sprint through existence. I prefer to endure it. The sprinters create noise. The endurers create capital. That's why the debt-free path isn't just financially sound, it's philosophically sound. It aligns you with time, not against it. And time, unlike leverage, never betrays the disciplined. So yes. Annihilate the debt. Then stay clear. Then invest with patience. Then wait. You'll look sluggish for a decade. Then one day, you'll look prescient, and the world will call it luck. It won't be luck. It will be mathematics, patience, and the absence of folly. That's how compounding rewards those who respect it, not with speed, but with certainty. If there is one lesson from observing money for decades, it's this: the game isn't about getting rich. It's about staying free. Every financial choice should serve that sole purpose. Freedom from debt, freedom from desperation. Freedom from stupidity. Because once you forfeit freedom, everything else becomes a negotiation. And you cannot negotiate with compound interest. It always prevails. People ask, what's the smartest move a normal person can make? I tell them, don't overborrow. Don't rush. Don't covet. Do that for 50 years, and you'll resemble a genius. But people dislike simple rules. They prefer complicated falsehoods. They want a shortcut that feels advanced. They want to optimize before they've stabilized. You cannot optimize chaos. You can only eliminate it. And debt, whether on a card or a balance sheet, is institutionalized chaos. It guarantees instability. It ensures that, regardless of your ideas, you'll always play defense. Look, you cannot forecast markets. You cannot control recessions, inflation, or rates. But you can control whether you owe. That is real power. The investors who sleep soundly aren't those with the highest returns. They are those who know no one can call their loan at dawn. That peace compounds faster than any fund. We used to say we'd rather be approximately right than precisely wrong. Well, paying off debt is approximately right every single time. It might not make you wealthy quickly, but it makes you impossible to bankrupt. And in this world, avoiding ruin is the supreme competitive advantage. I've lived through bubbles, housing, tech, you name it. Each time, the same pattern: the debt-free are ridiculed on the ascent, then envied on the descent. They appear dull in boom times, and divine in busts. That's the reward for rationality amidst recklessness. You cannot construct a good life on borrowed stability. The world is too volatile. But you can build one on discipline, patience, and the refusal to OWE.SO. If you're still pondering whether to invest or pay off debt, here is my ultimate answer: pay off the debt. Always. Then invest from a position of strength, not weakness. Let your capital compound, not your anxiety. Because when you finally own nothing, something extraordinary occurs. You begin choosing for the correct reasons, not the pressured ones. And that, my friend, is the true definition of wealth. Not the digits in your account, but the quiet in your mind when no entity owns you, not the market, not the bank, not your own cravings. When you reach that place, you've already won. That's the only prosperity worth pursuing, the kind that lets you wake each morning and think clearly, without dread, without urgency, without another's claim on your time. I've watched fortunes rise and fall. I've seen brilliant minds lose all and average minds build legacies. The difference was never intellect. It was freedom. The freedom to wait. The freedom to refuse. The freedom to think. You wish to know my best investment? It wasn't a legendary stock. It was the decision to never owe anything I couldn't settle today. That single choice granted me decades of compounding without interruption. No margin calls. No desperate moves. No sleepless nights fearing a creditor's call. Just time, patience, and the liberty to let sound ideas mature. That is worth more than any leveraged return you'll ever compute. So, here is what I want you to remember when this ends. Debt isn't merely a financial decision. It's a philosophical one. It's a choice about how you wish to exist. Do you want to spend your days managing obligations or constructing opportunities? Do you want to react to the world or respond to it? Do you want to be owned or free? The arithmetic is elementary. The psychology is arduous. But if you master both, if you eradicate the debt and stay clear, time will reward you in ways unimaginable now. Because when you're free, truly free, the world transforms. Opportunities once invisible emerge, risks once terrifying become manageable. Decisions once cloudy become obvious. That's what financial independence accomplishes. It doesn't just alter your balance sheet. It alters your lens. And perspective is the rarest asset in investing. You cannot purchase it. You cannot borrow it. You can only earn it by refusing to let any entity own your future. I've seen it all, more than once. And if there's one truth I'd stake everything on, it's this: the person who owes nothing, fears nothing. That is the ultimate edge in a world constructed on fear. So pay off the debt. Stay free. Invest wisely. Let compounding perform its magic, rewarding the patient, punishing the rash. That isn't just good advice. It's the only advice that matters. Because ultimately, wealth without freedom is merely poverty with superior furniture. And no one, not even the cleverest investor alive, can compound their way out of that truth. Your greatest investment is buying back your freedom. If this perspective shifted something for you, please like this video. It helps the channel Winds of Thought reach others standing at this same crossroads. Your journey to freedom starts with a single, clear choice. Make it.